Morning, it's Tuesday the 14th of June. My name's Tom Elliott and this is my market report. Well, this Tuesday is the first trading day after the long weekend, the Queen's birthday holiday, of course, on Monday. On Friday night, Wall Street fell quite heavily. Some bad economic data coming out in the US showing that even if there is an economic recovery, it is at best a jobless one. US unemployment is staying stubbornly above that 9% level, which does not bode well for the short to medium term future. Our market today is down around about 80 basis points, 0.8%. Wall Street was actually flat last night, but of course we've got that big fall from Friday still to catch up on. Most sectors and shares being sold off. A few exceptions there. Foster shares are up to the mid 460 level this morning. Now there are several reports in various US newspapers saying that Molson Coors and Grupo Modelo, which is the Mexican brewer of Corona, are less than 24 hours away from making a formal takeover bid for Foster's. We don't know if this has been confirmed yet, but the market likes the sound of it. Of course, Foster's only demerged from its wine business a few weeks ago, and the whole idea of demerging was to make both businesses, that is the beer business and the wine business, more attractive to potential takeover suitors. There's an old saying, be careful of what you wish for because you just might get it. In this case, the Foster's board could be faced with a takeover bid as early as Wednesday morning. Qantas shares, in contrast, were down. They've hit a post-float low of around $1.88. They were slightly lower than this in the absolute depths of the financial crisis 2 years ago, but leaving that aside, Qantas having a very tough time at the moment. Jet fuel prices are staying high, passenger numbers don't appear to be growing, and of course, as has been reported extensively throughout the press in the last couple of days, the clouds of volcanic ash from the volcano in Chile is doing terrible things to airlines around Australia. Virgin Blue shares also down 1 cent at 28.5 cents this morning. Base metals, gold and oil were all weaker on markets overnight, again reflecting that pessimism about the future, not just for US growth, but for global growth. Indeed, given that so much global growth comes out of China, many people are now looking at China and saying, well, that's what we've got to see what happens. Because, I mean, if Europe is stuffed and the US is stuffed, China was the only bright note. But some press reports over the weekend suggest that even China might be slowing. As a result, demand for base metals would slow, tin, copper and so forth. And unsurprisingly, shares in companies like BHP, Rio, Fortescue, all weaker today, as were the bank stocks, as I mentioned earlier, as was it just about everything. The $8 also down a bit, 105.8 US cents. Again, if demand for mineral commodities really drops off in the next few months, I reckon you'll see the $8 pummeled quite hard. It has, of course, hit a post-float high that is since 1983, but it's very, very dependent upon continued high commodity prices. Any potential slowdown in China could put a dent in the Australian dollar. So as I've said many times before, if you're in a position to do so, take advantage of it while you can. Well, we'll see this time next week whether a takeover bid has eventuated for Foster's.